How's it going, everybody? Welcome back to the channel. My name is Jay. The NASDAQ is in a bear market, the S&P 500 is down 13% year to date, and it's been just about a year since I've started my $0 to $100,000 dividend portfolio at M1 Finance. There's also been some things going on in my life that have affected this portfolio, so what the heck, let's do a good old-fashioned portfolio update. So here we are inside of my M1 Finance account, my passive income portfolio. As I said, I've had this open for about 1 year, and over that time, we are down 5.63%. That's $1,268 in market value I have lost, but thankfully I've earned $720 in dividends, making my total loss just about $550. That's actually not too bad, all things considered. My favorite investment I would be putting this money in otherwise is VTI, the Vanguard Total Stock Market Index, and over the past year, that's down 5.15%. So I'm only trailing the total stock market ETF by about 0.5%. Now, from the time I started this portfolio until fairly recently, I had been contributing $500 a month into this portfolio getting automatically invested. And I know on this channel from time to time, I stress the importance of having an emergency fund, some liquid cash should you need it in an emergency. Well, it just so happens over the past month or two, my house has decided to fall apart. I have got things breaking everywhere, and I have needed to basically deplete a large portion of my cash emergency fund. So due to those circumstances, I now have to rebuild that up to the level I'm comfortable with. So instead of contributing $500 a month into my M1 Finance portfolio here, I have knocked that down to $250 per month until I get my emergency fund back stable and secure. And that really sucks because the market has been falling, and this is when I really want to be pouring money into my investments heavily, but I can't time when stuff around my house breaks or how much of it breaks at the same time. So anyways, that's kind of the story on why I've been contributing a little less to this each month. So our growth is going to slow until I can bump that back up. Now let's look at how the investments in this portfolio are doing. You can see I have got this portfolio split into two pies. My main original income ETFs, the popular quadfecta portfolio, and then the secondary dividend ETFs, the three funds I talked about in my last portfolio update that I recently added to this. If we go into that quadfecta portion of this portfolio, my four top income ETFs, SCHD, JEPI, NUSI, and QYLD, those are down a little over 6% in the year since I have established this portfolio. And you can see SCHD is carrying my portfolio. While this portion of the portfolio as a whole is down 6%, SCHD, my top holding here, is actually up nearly 7% over the past year. That means SCHD is beating VTI, the total stock market index, by 12% over the past year. That's phenomenal for a dividend ETF. The next fund in here, also in the positive, also beating the total market, is JEPI, JEPI. We're up about 3% there on the year. And then the two laggards of the quadfecta over the past year, NUSI, which I did an entire video on how that's killing my portfolio, that is still down nearly 20% over the past year. And then QYLD, which has the highest dividend yield in this portfolio, that is down almost 13% over the past year. And one cool thing about M1 Finance is up here where it says my earned dividends, I can view, and I can get the breakdown of which funds I have earned the most in dividends for. So out of this quadfecta pie of this portfolio, I've earned $709 in dividends over the past year. 282 come from QYLD, 196 from JEPI, 170 from NUSI, and only $60 in dividends from SCHD. But remember, that's a quarterly payer, not a monthly payer. So I should be getting another decent payment from SCHD at the end of this month, June 2022, which will bump that dividend number up to somewhere a little more competitive with the others. So now if we go back to the main portfolio and then into the three new dividend ETFs I added in my last update a couple months ago, you can see these 3 ETFs are up about 1% since I added them to the portfolio in March. So you remember in this portfolio we have SCHY, which is the international version of SCHD. That is just about break even since I've added to the portfolio. The same goes for Devo, that's about break even. And then we have SPHD, which is a high dividend, low volatility ETF. That is actually up 4% since I added it to the portfolio. So SPHD isn't a fund I'm really ever expecting to carry my portfolio in terms of return, but in the down market we've been seeing over the past quarter or so, SPHD is actually outperforming because it's full of those very stable, very low volatility dividend payers. So now back to the portfolio as a whole. And you may notice down here, my actual allocations and my target allocations look way out of whack. And that's because instead of rebalancing the portfolio and triggering a whole bunch of taxable events by selling shares of some funds and buying shares of others, I decided I was going to reweight this portfolio with the new money I'm contributing every month. So that means any money I contribute is going into the 3 new ETFs. Since those are way underweight, I want those about 30% overall. Right now they're about 17%. Basically all my money, all my dividends are getting reinvested into those funds until they get up to the set weighting that I've allocated for them in the portfolio. You can also see if I go back into the original income ETFs, the quadfecta portion of this portfolio, I changed around the weightings inside of this pie in M1 Finance as well. I bumped SCHD up to 35% of this pie. I knocked NUSI down to 10%. And you can see those are still out of whack because again, all the new money I'm adding is going to the 3 new ETFs currently. So there's not new money coming in here, which would go to SCHD to bump it up. So unless NUSI really keeps dropping and SCHD really keeps gaining, these are going to be out of whack for my target allocation for the time being, but I'm totally okay with that in the short term. And I've got to say, I am pleasantly surprised with how this portfolio is performing. Yes, I'm down 5.63%, but there was a lot of unknowns about these income ETFs. A lot of them are fairly new. We've never seen them go through a real bear market, a real market drop. So we didn't really know how they'd perform in that scenario. And yes, they are going down. Nothing is immune from a bear market, but I am impressed on how they're holding their own. This portfolio overall isn't lagging VTI, the total stock market, by all that much at all. 0.5%. I'll take that any day out of a dividend, mainly income focused portfolio. If you compare that to a lot of the popular growth stocks that are out there that are down 50, 60, 70+% over the past year or so, things could be a lot worse. And I do own some of those stocks in other portfolios, so I'm feeling the pain there as well. Like I said, the whole goal of this portfolio is to create an income stream that can either complement or someday replace my main income from my job, to have its performance essentially tracking the total stock market index year to date is more than I could have ever asked for. I know when things turn around and the growth kicks back in and the stock market starts to rebound, I will start lagging at that point. But again, that's why this portfolio is only a portion of my overall holdings. Most of my investments and most of my money are in those 4 index ETFs I have linked in the description of every one of my videos. That's my main portfolio. This one just for building up dividend income, but because life and the stock market gets in the way, our journey to $100,000 is gonna take a little longer than previously planned. So hopefully things in my house stop breaking and I can start contributing more money to this portfolio very soon. Or who knows, maybe one of these videos will go viral, I'll make a ton of money from it and I can dump it all in here. Stranger things have happened. I hope you enjoyed this update on my portfolio struggles. Thanks for watching, and I'll see you next time.